Welcome back, class, to Accounting 2402, Principles of Managerial Accounting. This is Dr. Mercado speaking, and I hope all of you are doing great and are staying safe out there. In this particular lecture, we are continuing covering Chapter 21, which deals with variable costing for management analysis. The problem that I'm going to be working on today is Problem 21-1A. Now, let me just quickly see right here. Let me see. Yes. Now, this is a super important problem. Why? Because you're going to see it on your test, okay? So I am taking the time to cover it. That way you have a detailed explanation of how to solve it. And if after you listen to my lecture you have any questions, well, then you can contact me, okay? But this video is intended to help prepare you for completing the problem, which you're going to have in your homework, but you're also going to be seeing this problem in your test. So it's important, okay? So let's pay close attention on problem 21-1, okay? So this particular problem deals with both the absorption and the variable costing income statements. So what I like about this problem is that we're going to be comparing the absorption costing income statement with the variable costing income statement so we can see the difference between the two, okay? Okay. It says, during the first month of operations ended August the 31st, Kodiak Refrigeration Company manufactured 80,000 mini refrigerators, of which 72,000 were sold. So we need to get it clear. We manufactured 80,000. We sold 72,000. So that means we have 8,000 remaining. Okay, how did we get 8,000? Well, we manufactured 80 and we sold 72. So that means we have in our ending inventory 8,000 mini refrigerators that have not been sold. Okay. Operating data for the month are summarized as follows. We have sales of 10,800,000. We have our manufacturing cost, direct materials, 6,400,000. Direct labor, 1,600,000. Variable manufacturing cost, 1,280,000. Fixed manufacturing cost of 320,000. My total manufacturing cost is $9.6 million. Then we have our selling and admin expenses. We've got variable at $1,080,000 and fixed at $180,000. So my total selling and admin expenses is $1,260,000. Now the instructions. We are required to prepare an income statement based on the absorption costing concept, and then we're going to prepare an income statement based on the variable costing concept. Okay, so we have an income statement using both the absorption costing method and the variable costing method. Now, I got this information directly from your book, okay, and I'm going to read it as is. There's no point of me trying to, it's pretty clear what we have to do here. So it's just important to notate that absorption costing is required when we utilize GAAP, okay? So this is required for any financial statements distributed to external users. Under the absorption costing method, the cost of goods manufactured is composed of your direct materials, direct labor, and factory overhead costs, and this includes both fixed and variable factory costs, okay? In the financial statements, these costs are included in the cost of goods sold, which is in the income statement, and the inventory in the balance sheet. Now, if we are preparing financial information for internal users in the decision-making process, managers often use the variable costing method, sometimes called direct costing. Okay. Now, under this method, the cost of goods manufactured includes only, okay, this is the key word, it includes only variable manufacturing cost. Thus, the cost of goods manufactured consists of direct materials, direct labor, and variable factory overhead. So instead of on the factory overhead, instead of including fixed and variable factory overhead, we are only including variable. Okay. Under the variable costing, fixed factory overhead costs are not part of the cost of goods manufactured, rather they are period costs. Okay. So I've set up the income statement for both just to make the lecture a little bit shorter, because I know that it can get boring if I talk for an hour. Okay, I understand. I myself, once people start talking for too long, I lose concentration. So I understand. But let's try to stay focused, okay? So here we have the name of the company. It's Kodiak Refrigeration Company. And the first one that we're preparing is the absorption costing income statement for the month ended August the 31st. Okay, now we are going to start with sales. Okay, now the sales figure is provided. Okay, 10,800,000. Okay, so we don't have to do anything there. We're just going to plug it in. And it's coming directly from there. Sales 10,800,000. Now, we have our cost of goods manufactured. Okay, now remember, under the absorption method, we include direct materials, direct labor, variable and fixed manufacturing costs. Okay, so basically my manufacturing cost total is the 9,600,000. Okay, that is how much my manufacturing costs are. Okay, so my cost of goods manufactured $9.6 million. Yes, that is correct. 9,600,000. There we go. Okay, now we are gonna deduct any ending inventory we had. Do we have ending inventory? Yes, we do. Remember, we manufactured 80,000 mini fridges and we sold 72. So that means we have 8,000 mini fridges that we have not sold. That is in my ending inventory. Okay. So now they don't give you the ending inventory figure here. You have to calculate it. Now, how are we going to calculate that? Well, I know that my manufacturing costs were 9,600,000. Okay, that's the total cost. That's how much you spend in manufacturing the 80,000 mini fridges. Okay, I'm going to divide that by the total units that were produced. We manufactured 80,000 units. 80,000 mini fridges. Okay. Okay. So let's see what that gives us. 9,600,000 divided by 80,000 units, which is how many fridges we manufactured in total. So that tells me that to produce or to manufacture each fridge, I spend $120. Okay. That's my cost per unit. 120 bucks. Okay. Now, if I know that it takes me $120 to manufacture each unit, okay, and I know that I have 8,000 units remaining in my inventory, how do we get 8,000? 80,000 minus 72,000. That gives you your 8,000. Okay, 80,000 minus 72,000. That gives you your 8,000 ending inventory. So you've got 8,000 units times $120 a piece. That's how much you spend on manufacturing each fridge. Okay, and let's see what that gives us. 8,000 times 120. That gives me $960,000. I'm going to deduct this ending inventory because these goods have not been sold. They're still sitting in my warehouse. Okay, so I'm going to deduct. So now I can calculate my total cost of goods sold, which is going to be your 9,600,000 minus your 960,000 units. Okay. Okay. So 9,600,000 minus 960. That gives you 8,640,000. Okay. Now we can calculate your gross profit. Okay. Your gross profit is going to be your sales. Okay. Minus your total cost of goods sold. And that's going to give you a gross profit of $2,160,000. So what did we do? We got sales minus your total cost of goods sold, 10,800,000 minus 8,640,000. That gives you 2,160,000. Now I'm going to go ahead and I'm going to deduct my selling and admin expenses. This includes both fixed and variable. Okay, and we're going to get that from over here. I've got a total selling and admin expenses of $1,260,000. Okay. So I'm going to go ahead and I'm going to put here negative 1260, 1, 2, 3. Okay, there we go. And now I can finally calculate my operating income. Okay, your operating income is going to be your gross profit minus your selling and admin expenses. Okay, so it'll be your 2,160,000 minus 1,260,000. That gives you 900,000 operating income. Okay. So that is your absorption costing income statement. This is what is required of you to prepare when you are using or following GAAP. Okay, this is required under GAAP. Okay, now we're going to use the same information, but now we're going to use the variable costing method, and this is what is used internally by management. Okay, so once again, we're going to start with our sales, and our sales figure is 10,800,000. Okay, now we're going to have our variable cost of goods sold, and this is only our variable components. Okay, now I'm going to go ahead and I'm going to put here what those are. Okay, we have to go back and we're going to look at our variable components. That includes my materials, my labor, and my variable manufacturing cost. So we're going to add those together. So it's 6,400,000 and a million. It's at 6,400,000 plus 1,600,000 plus 1,280,000. And let's see what that gives us. So it's 6,400,000, 1, 2, 3, plus 1,600,000 plus 1,280,000. That gives me 9,280,000. Okay. So all we're doing is we are adding those three components right there. Okay, we are adding those three components: direct materials, direct labor, and variable manufacturing cost. Okay, and that gives me 9,280,000. Once again, we have to calculate our ending inventory. Okay, remember we have 8,000 units that we have not sold. Now we're gonna have to calculate our per unit cost. Now in this case, we're gonna get the 9,280,000. 9,280,000, and we're going to divide that by the 80,000 units that were manufactured. Okay, and let's see what that gives us. 9,280,000 divided by 80,000 units. That gives me $116 per unit. Okay, and why is it lower than up here? Because up here I'm included my fixed cost as well. That's why it's $120 per unit. Down here, I'm only including my variable cost, so it gave me $116. Okay, so I know I have 8,000 units, okay, remaining, the units that we have not sold, and I'm going to multiply it by $116. Okay, this is my ending inventory. This is what we have not sold. Okay, and that gives me $928,000. So I'm going to deduct these. These are the units that are available for sale. Okay. Now I can calculate my total variable cost of goods sold. Okay. That will be your 9,280,000 minus 928. Okay. That gives me 8,352,000. Okay. 8,352,000. Okay. You know what? And because these are cost of goods sold, the textbook has them as a negative because it's a deduction, and because it is a deduction, I have to change my formula real quick. Let me just quickly fix this because because the system is let me see, that should be 8,640,000. Okay, there we go. So over here, the variable cost of goods manufactured, okay, so that my variable cost of goods sold, that number should be a negative. Okay, because it's a deduction. We are deducting, this is how much it's costing us to produce the goods. So because it's a cost to us, we put it as a deduction. Okay, now in your Cengage, I believe you have the option of doing either or, unless the instructions state to enter that in parentheses. Okay, but it's up to what the specific system requirements are. Okay, now my manufacturing margin is going to be your sales minus your total variable cost of goods sold. That gives me 2,448,000. Okay, so what we're going to do is we're going to get the 10,800,000. Okay, minus 8,352,000. That gives me 2,448,000. Okay. Now we're going to go ahead and we're going to subtract my variable selling and admin expenses. My variable selling and admin expenses are 1,080,000, and we're only picking up the variable. Okay. Now I can calculate my contribution margin, and your contribution margin is going to be the 2,448,000 minus 1,080,000. That gives me 1,368,000. Okay. So that is my contribution margin. Now after my contribution margin, I'm going to have my fixed cost. Okay, and I have my fixed cost for my fixed manufacturing costs. Okay, so my fixed manufacturing costs are down here. Okay, I've got $320,000. So I'm going to put that in the first column. And then I've got my fixed selling and admin expenses of $180,000. Okay, so my total fixed cost is going to be the sum of those two. It's 500,000. Now because these are costs, they're going to be in parentheses. Okay, because if it's every time that you spend money to manufacture, you spend money for any type of cost, it's going to be in parentheses. Okay, so it's 500,000 deduction. Okay, now I can figure out my operating income. So you're going to get your contribution margin of 1,368,000 minus your total fixed cost of 500,000. That gives you an operating income of $868,000. Okay. So if you notice, under my absorption costing income statement, I've got income of $900,000. Under my variable costing, I've got operating income of $868,000. So the absorption costing gives you a higher operating income. Okay. Now, we've already completed requirement 1 and 2, which is preparing the reports. Now, requirement 3 asks us to explain the reason for the difference in the amount of operating income reported in report 1 and report 2. Okay, so the operating, if I could spell correctly, the operating income, okay, reported under absorption, God, I can't spell, absorption costing exceeds the operating income reported under variable costing by $32,000. Okay, that is the 900,000 minus the 868. Okay, that's the 900,000 minus the 868. So the operating income reported under absorption costing is more by $32,000. Okay. Okay. This $32,000 is due to including $32,000 of fixed manufacturing cost in inventory under absorption costing, which is the 8,000 units times the $4, and then we're getting the 320,000 divided by the 80,000. Okay. The 32,000 was thus deferred to a future month under absorption costing, while it was included as an expense of August, which is part of the fixed costs under variable costing. Okay, so let's see what we wrote here. Okay, so we already know the first part, that the difference between the absorption costing and the variable costing is $32,000. Now the $32,000 is due to including $32,000 of fixed manufacturing costs and inventory under absorption costing. So we have those 8,000 units of our ending inventory times $4, and that is basically the difference between the $120, 120, the top part. Remember when we calculated the per unit cost of 120, and when we do the variable costing, we calculated the per unit cost of 116. So that's the $4 difference that we're talking about here. So the difference is $4 per unit. So then that's causing us the $32,000 difference. So what we basically did, we deferred the $32,000 cost to a future month under absorption costing. So the cost is being deferred. Why? Because we haven't sold those units yet. So we're not going to take them into consideration yet. Okay. So it was deferred to a future month under absorption costing, while it was included as an expense of August under variable. So on the top part, we deferred those costs for those 8,000 units to the next month. In the variable costing, we included those costs, even though that we have not sold those 8,000 units, and part of those costs for those 8,000 units are fixed. We went ahead and we included all of our fixed costs for all of the 80,000 mini refrigerators in this month. Okay, so we went ahead and we just got rid of all of our fixed manufacturing costs as a period expense, and then that's what is causing our operating income to be lower. Okay, so it just depends what management wants to look at. The correct way to do it, if you're preparing your financial statements under GAAP, is to do the absorption costing, which is the appropriate way of deferring your expenses to when it's actually the actual cost is incurred. But this is more for management decision making. They calculate the actual cost of the units sold, but they also take into account the fixed cost as a period cost. Okay, so this is the problem that's going to be on your test. You have the absorption costing income statement on the top, and then the variable costing income statement in the bottom. So it's just a matter of being very careful when you're doing your variable costing income statement to only take into consideration the direct materials, direct labor, and the variable manufacturing cost, as well as when you are calculating the per unit cost, you're going to be using that variable cost, the total variable cost of those three components, and then divided by the quantity of units produced, which is the 80,000 units, to get your per unit cost. Okay, so this is the completed problem. This, you're going to be seeing it on your upcoming test, so make sure that you listen to the lecture, that you practice in your homework. Remember, you have 2 attempts on your homework, and I keep the highest grade earned. That way you can practice and prepare for when it's ready, it's time to take the test. You know how to do this, and you know where each of these numbers is coming from. Okay, so that is basically it for chapter 21. Please read the chapter before you attempt anything. It is critical that you read and try to understand the information presented so you can be able to apply it to the actual problems. If you have any questions on any of the problems, please don't hesitate to contact me. I'm available Monday through Friday. Send me a Blackboard message, an email, a pronto message, whatever works for you. But I do want to see you attempt. I don't want you to just send me a message, send me a text message, Miss, I'm lost. No. If you're taking the time to contact me, I want to know what problem you're working on. I want to see what you're doing. I want to see your steps. how you're attempting to solve it, and that way I can provide guidance. Okay, so the preferred method of communication is Blackboard messages, but if you are using Cengage and you're working a particular problem out, you do have a feature there that tells you that you can email your professor, and it includes a screenshot of the problem that you're working on. That works as well. Okay, I will also try to get back with you as soon as possible when I get those email messages. So that is basically it. Have a wonderful rest of your week. Make sure that you stay up to date with your assignment deadlines, and stay safe. Have a great day. Bye bye.